We're jumping straight into Ondas today. Everyone is watching the price action, but the real story is the dramatic inflection from guidance miss to beat.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into the gears and circuits of what's happening here, do us a quick favor. If you want us to keep simplifying the market like this, just hit that subscribe button and maybe drop a like. It really does help get this info out.
All right, let's do this. Ondas Holdings. To really get why this moment is so important, you have to understand how the market has seen this company for the longest time.
As a science fair project, basically.
That's a perfect way to put it. Yeah. You know the type. Really cool tech, fascinating demos. You see a robot do a backflip in a lab.
Right.
But at the end of the day, it's a toy. It lives in a lab. It burns a ton of cash, and it generates press releases, not profits.
It was all potential, just a lot of could be and almost no is. But looking at the data from this month, February 2026, the whole story has just violently shifted.
It has.
We are not looking at a science project anymore. This looks like a defense powerhouse in the making. And Wall Street is scrambling to figure out what it's worth now.
It really all comes down to the numbers, and you mentioned the guidance update. Usually, when a small company like this updates guidance, I instinctively kind of flinch.
Oh, me too. It's almost always bad news, right? A polite way of saying, we messed up.
Exactly.
Yeah.
Lower your expectations. Or, my favorite, the supply chain ate our homework.
But Onus just threw that whole playbook out the window. They didn't just meet their targets. They obliterated them. Let's start with the full year 2025 numbers, just to set a baseline.
Okay.
They're projecting revenue between 47.6 and 49.6 million.
Which, let's be fair. In the grand scheme of the defense world, you've got giants like Lockheed or Raytheon. That number sounds like a rounding error.
It does, but context is everything here. That 49-ish million beats their own earlier guidance by 23%.
23%.
In this sector, a 2% beat is a good quarter. 5% is a great quarter. 23% suggests something fundamental has changed in the business. The pipes are finally flowing.
It suggests they found money under the mattress, or, and this is more likely, customers actually started taking delivery and, paying their bills. But I'm looking at the breakdown here, and the full year is good. But that Q4 2025 really stands out.
It's the headline grabber. For just that one quarter, Q4, they're projecting $27 to $29 million.
Oh, wait, hold on. Let me just do the math on that. If they do, say, $29 million in Q4, and the full year is around 49, does that mean they did more than half their entire year's business in the last 3 months?
That's exactly what it means. It's a 51% increase over what they told us they'd do for the quarter just a few months ago.
So they basically crammed 6 months of business into 3 months. That's unusual. That kind of acceleration usually means one of two things.
Well,
Either they cleared a massive backlog that was stuck in a warehouse somewhere, or a really big client just picked up the phone and said, we need everything you have, and we need it right now.
and looking at their 2026 outlook, it really seems to be the latter. Management raised their 2026 revenue target to a range of $170 to $180 million.
Whoa.
The previous target was $140, so that's a $40 million hike in expectations just based on what they're seeing today.
Okay, I have to play the skeptic here. It's my job. Because when a company suddenly says they're going to nearly quadruple revenue in 1 year from, 48 million to 180 million, my alarm bells are screaming.
Sure.
Is this just, management being optimistic? Are they counting chickens before they hatch, or is there actual ink on paper?
That is the multi-million-dollar question, isn't it? And normally with these little defense tech firms, it's all pipeline this and addressable market that. But for once, the answer seems to be yes, there's ink.
Real deals.
Real deals. Look at the headlines from just the last couple of weeks. February 13th, they announced a multi-million-dollar order for the Iron Drone Raider.
The Raider, that's their interceptor drone, isn't it? The one that hunts other drones.
Exactly. It's a hunter killer. It finds a hostile drone and physically disables it. And the buyer wasn't some hobbyist. It was a NATO country.
And that's a huge validation. Listeners need to understand, NATO procurement is a bureaucratic nightmare.
Oh, I'm sure.
You don't just sell them a drone. The standards for security, for interoperability, they're incredibly high. If a NATO member is buying the Raider, it means that tech has survived a gauntlet of testing.
It validates the engineering. And that's not all. Go back just 4 days before that, February 9th, a $30 million multi-year program for demining in Israel.
Demining. Okay, so that's serious work. That's not just surveillance. That's clearing a path through a minefield.
This is their 4M smart demining tech, and $30 million is not a pilot program. You don't spend $30 million to just test if something works. That's a deployment.
So we have NATO buying drone interceptors and Israel buying mine-clearing robots. These are absolutely mission-critical jobs.
And that's the key. You don't use beta software to clear mines or patrol a border. You use stuff that works, period. And that's why the revenue guidance is jumping. The contracts are moving from the trial phase to the scale phase.
It really does sound like they've finally crossed that chasm from R&D into actual commercialization. But I want to dig a little deeper on why they're winning. I mean, let's be real. There are 1,000 drone companies out there. What's the moat?
This is the part I think the market is still catching up to. Ondas isn't really a drone company.
But they sell drones. We just talked about the Raider.
They do, but calling Ondas a drone company is like calling Apple a glass screen company. It's true, but it misses the entire point. Ondas is selling a proprietary ecosystem. A system of systems, they call it.
Okay, that sounds like some heavy marketing speak. System of systems.
Yeah.
Break that down for us. What does that actually mean?
All right, picture a modern military base or a border checkpoint. You've got threats coming from everywhere, right? You need eyes in the sky. That's your aerial drone.
Yep.
You need patrols on the ground. That's your ground robot. And you need to be watching the airwaves for enemy signals. That's your cyber defense.
And usually you'd buy the drone from company A, the robot from company B, and the cyber stuff from company C.
Right. And then you spend the next 5 years and $10 million trying to get them all to talk to each other. It's a nightmare. Ondas has bought and integrated the entire stack.
So they own all the pieces, air, ground, and cyber.
Every piece. For air, you have the Ondas autonomous systems, the Raider. For ground, they've got RoboTeam and Apero Motion. These are rugged robots that can crawl and climb. And for cyber, they have Centrix, which is their counter-drone hacking tech.
I see. So it's vertical integration. But what stops a general from just buying their robot but using their own command and control software?
The glue. This is the secret sauce. It's a platform called Fullmax.
Fullmax.
It's their own proprietary software-defined wireless network. Think of it like a private military-grade 5G network that they control. It's the backbone that lets the flying robot talk to the crawling robot in real time while the cyber system watches their backs.
Okay. So you're not really buying a drone. You're buying the whole nervous system. You're buying the network.
You are buying the nervous system.
That sounds a lot like the Apple ecosystem strategy, you know. You buy the iPhone, so you get the AirPods because they just work. Then you get the Mac. Once a military installs this Fullmax backbone, the cost to switch to a competitor must be astronomical.
Through the roof. You can't just plug in a cheaper drone next year because it doesn't speak Fullmax. It won't integrate with everything else. You get locked in.
And that lock-in is the holy grail for a company like this. It means recurring revenue, service contracts. You become the operating system for their border security.
And there's one more layer to this moat. It's not just technical, it's regulatory. The NDAA.
The National Defense Authorization Act.
Exactly. In the US and across most of NATO, you are flat out banned from using tech from certain countries, like China. You can't use a DJI drone to inspect a US naval base. It's illegal. Ondas is fully NDAA compliant.
So that's a regulatory wall that blocks out the cheap competition. Even if a foreign competitor has a drone that's half the price, it doesn't matter. They can't even bid on the contract.
Right, and as geopolitical tensions rise, that moat actually gets deeper and wider.
Okay, so let's recap the bull case before I try and tear it apart. We've got exploding revenue, confirmed contracts with NATO and Israel, a very sticky ecosystem that locks customers in, and a regulatory wall protecting them.
Yes, the whole pitch.
It sounds like a slam dunk, but
I could feel that but coming from a mile away.
there's always a but with these kinds of stocks. The story is great, but the execution, that's where these companies usually die. I want to talk about the Frankenstein risk.
Frankenstein. That's a vivid image.
I think it's appropriate. We just praise them for owning air, ground, and cyber. But we have to remember how they got all those pieces. They didn't build it all in-house.
They bought it. It was an M&A strategy.
Exactly. They bought RoboTeam. They acquired the tech for Raider. They're trying to stitch together, 5 different technology stacks? Optimus, Raider, Apero, RoboTeam, Centrix.
And anyone who's ever worked in tech knows that merging 2 code bases is hard enough. Merging 5.
It's a technological nightmare. You have different coding languages, different hardware, different engineering cultures from different countries. On a PowerPoint slide, it looks beautiful. a system of systems. In reality, it can easily turn into a monster where the arm doesn't listen to the brain.
So the big risk is integration failure. The glue might not stick.
Precisely. And if they have integration delays, if the system is buggy, that $170 million target for 2026 just evaporates. That NATO client doesn't just complain, they pull the contract and they blacklist you.
That's a huge execution risk. And reliability is everything in that world. But there's another risk that goes with this. The bank account. The profitability problem.
Right. Because for all this great revenue growth, let's be very clear. Ondas has historically been a money incinerator. They are not profitable.
Not even close. There was a recent analyst note that just summed it up perfectly. They called the stock expensive, dilutive, unprofitable, and still a buy.
Let's unpack that word dilutive for a second. We hear it all the time, but what does it really mean for an investor?
Imagine the company is a pizza. As a shareholder, you own one slice. When a company is dilutive, it means they're constantly cutting the pizza into more and more smaller slices to sell to new investors to raise cash.
So even if the whole pizza gets a little bigger, your personal slice keeps getting thinner.
Exactly. Your ownership stake shrinks. Ondas has been funding all these acquisitions and this growth by issuing new shares. They're burning cash to grow.
And that's the danger zone they're in right now. It's a race against time. They have to get to that $180 million revenue mark and become cash flow positive before they run out of money.
It's a total tightrope walk. If those big contract payments get delayed, they have to go back to the market, sell more stock, and dilute everyone all over again.
So we have a really clear picture now. Huge potential reward, but massive risk on both the execution and the balance sheet. So for someone watching this, what are the things to look for? We can't wait a whole year to find out if they hit that big number.
No, you have to watch the next 30 days. There are immediate catalysts coming up. The biggest one by far is the Q4 earnings release, which should be in March.
That's right around the corner.
It is. And the only number you need to care about is that Q4 revenue, $27 to $29 million.
Why is that number so critical?
Yeah. Because it's the first test. They just put their credibility on the line with this huge guidance raise. If they come out in March and they hit, say, 29 million, it proves the turnaround is real. It proves the ink on the paper is turning into cash in the bank.
And if they miss?
If they come in at 24 million and start blaming supply chain issues, the market will be absolutely brutal. They cannot afford to miss this first big hurdle.
Okay, so Q4 earnings is the scorecard.
Mm-hmm.
What about outside factors?
You have to watch the geopolitical triggers.
Right.
And look, this is the grim part of investing in defense. Global instability is the best marketing engine for this company.
You're talking about the ongoing conflicts in places like Israel and Ukraine.
I am. The Iron Drone and the Centric systems are built for exactly those environments. Their sales are directly tied to border tensions and the threat of drone warfare.
It's cynical, but it's true. Every time a new drone threat makes the news, the investment case for a company like Ondas gets a little stronger. The need becomes more urgent.
And lastly, watch for new deals. Specifically, keep an eye out for anything related to Ondas Capital or a big expansion of that NATO contract. They have this thing called the Core Plus Strategic Growth Program.
Which is just corporate jargon for we want to buy more stuff or partner up.
It is. It signals more M&A could be coming. And if they were to announce a partnership with a major U.S. prime contractor, a Lockheed Martin, a Raytheon, that would change the game completely.
Oh, absolutely. That would solve that Frankenstein credibility issue overnight. If a major player validates the tech, the risk profile drops significantly.
So let's wrap this all up. What's the lowdown on Ondas?
It feels like we are looking at a company at one of those rare critical tipping points.
I think so too. Ondas is trying to make the hardest jump in business, from a speculative R&D lab to a real commercial defense contractor.
Yeah.
And they have a $180 million line of sight for 2026. That's not small potatoes anymore.
No, it's not.
Yeah.
But the bridge to get there is still pretty shaky.
And that's the final thought I want to leave you with. The question isn't really whether the technology works. The NATO contract proves it does. The question is whether the company works. Can they survive the growing pains of stitching 5 companies together without running out of cash first?
It's purely an execution play now. The story's been written. The real work begins.
Well put. Keep your eyes on the execution, not just the headlines. We'll be watching that March earnings call very closely. Thanks for tuning in to the Easy Money Show. We'll catch you on the next move.